Hello, everyone, and welcome to the Kentucky Small Business Development Center's weekly webinar. I'm certainly glad you're here today. As we allow attendees a few moments to join our event, I'd like to share a little bit about the Kentucky SBDC. As the only statewide, nationally accredited program that provides entrepreneurial and business development services, the Kentucky SBDC plays a vital role in the Commonwealth's economic development by assisting entrepreneurs at every stage of their business life cycle. For almost 40 years, the Kentucky SBDC has assisted emerging and growing businesses by providing professional expertise, tools, and information necessary to make sound business decisions in a complex and ever-changing workplace. We do this at no cost to our clients, thanks to the U.S. Small Business Administration, who co-sponsors our program, which is then administered by the University of Kentucky, who partners with regional universities, colleges, and local economic development agencies. We're also part of a national network, America's SBDC, with over 1,000 SBD centers across the nation. To learn more, visit kybizhelp.com, and there you'll find additional resources to help fund, start, and grow your business. To request personal assistance, email us at info@kybizhelp.com or call 1-888-475-7232. We've been doing all our counseling sessions virtually, so you can get to us at any time, most days of the week. A little reminder too, a recording of today's webinar will be emailed to you this afternoon. If you look to the right of your screen, you'll find the chat feature. So if you have any questions, we'll answer them at the end of the presentation. So please try the chat feature out right now by saying hello and telling us where you're from. And why don't you give us a quick weather report? I think that's on everybody's mind today. So again, I'm Dave Etkin. I'm the director here in Louisville, the Louisville Small Business Development Center, and we're one of 13 centers spread throughout the Commonwealth of Kentucky. And with me today is my good friend and colleague, Shirie Hawkins, who is a senior or assistant vice president of commercial lending at Community Trust Bank. And also she was one of us for a while. You worked for the SBDC as a center director in Lexington for 10 years, I guess?
10 years, Dave. 10 years.
10 years, yeah. And Shirie was a great center director. She got all the awards, did all the good stuff, and we all tried to be like her.
Thanks, Dave. I appreciate that. No.
And it's all true. So today, let's talk about SBA loans because, when we hear word the SBA in the news, all we hear is PPP. But there's a lot more that's available, and there's a lot more that has been changed and added. There's a lot of features and things that you can take advantage of that were part of the new legislation. So.
Great, Dave. I appreciate it. Thank you all for having me here. As Dave had mentioned, my name is Shirie Hawkins, and I am a commercial lender with Community Trust Bank. Just to give you a little bit of information about Community Trust Bank, it was founded in 1903 in Pikeville, Kentucky. We are headquartered in Pikeville. We serve the communities of Kentucky, West Virginia, and Tennessee with a total of 70 banking centers. Miss Jean Hale is our president and CEO. Community Trust Bank is the second largest community-based bank that is headquartered in Kentucky with over $5 billion in assets. One thing that's we strive to be and we are the number one community-based bank in Kentucky that is the SBA lender 11 years in a row. So community-based means that we are located in Kentucky and our lending decisions are based local in Kentucky. Today, what we're going to talk about is what is the SBA. We're going to talk a little bit about the products. We're going to talk about how to apply and a couple of new changes and the PPP. So we'll do that. So a little bit about the Small Business Administration. It was established in 1953. It is the only cabinet level federal agency that is dedicated to small business. What SBA does, because I know many folks believe that SBA actually lends money, but actually it does do that on the disaster side, but mainly it's there to connect entrepreneurs with lenders and funding to help them plan, start, and grow their business. As Dave had mentioned, the SBA does provide free business advice through the Small Business Development Centers, SCORE, the Wisdom Business Centers, and the Veteran Business Outreach Centers. They offer federal contracting, disaster loans, export financing, as well as the SBA Guaranteed Business Loans. So we're going to focus a little, mostly today, on the SBA Guaranteed Business Loans. The disaster loans, a lot of people have been hearing about those right now because of COVID. So there are some folks out there who have received the EIDL loan, the Economic Injury Disaster Loans, or EIDL short. So those are the disaster loans, but we're not going to spend any time discussing those. Those are funded directly through the Small Business Administration. The SBA Guaranteed Products, as David mentioned, the SBA works with banks and partnered organizations to offer competitive rates and lower down payments for businesses who are looking for funding. As I mentioned, the SBA generally does not lend directly to the business owner. It is a partnership relationship with a bank or a financial institution in that regard. So the SBA provides a guarantee on that. So say, for instance, if you're a business owner and you don't have collateral, or you don't have a 20% down payment, an SBA loan may be an option for you in order to assist you with obtaining your goal of starting a business and obtaining funding. I'm going to talk a little bit about the SBA 7A loan, the SBA 504 loans. The SBA 7A, which most people hear about or know about, does have a maximum loan amount of $5 million. Mainly it's used to either purchase business assets, used for working capital, purchased equipment, furniture, fixtures for your business. A lot of folks use it as startup capital in order to get them going on their direction. The eligibility requirements on that, those generally, they always start with the bank. I'm going to back up a little bit. So most people think that when they want an SBA loan, they would go directly through the Small Business Administration. Actually, you would go directly through your lender. So when you are interested in borrowing money for your business, you would go to your bank and ask for a business loan. In the business loan, the commercial officer or the business officer would be talking with you and asking you different questions about your business. What's the use of the proceeds? What are you doing with it? What type of business do you have? But you must be a for-profit business, and you must meet the SBA definition of a small business, and you must not be delinquent on any current U.S. government obligations. There, a little bit there, it talks about the interest rates there. And what happens is, since Community Trust Bank is a preferred lender, we would be using the rates that the bank is offering at this time. So whatever, if it's purchasing equipment, purchasing a building, it would be using the bank rates. There are the guarantees there, the 85% up to 150, 75% guarantee for those greater than 150. There's some changes on that, and I'll explain that in just a minute here. So the 7A Express, how the 7A Express works is, as a preferred lender, which means that you would apply directly through your bank, and all of the paperwork would be bank prepared documents. So this is a little bit different. So it says that the maximum loan amount is $350,000. Well, with the new package that was signed in December, that now maximum amount is $1 million. And generally that guarantee is a 50% SBA guarantee, but that has changed a little bit. It is now a 75% guarantee for loans up to $350,000. It is used to purchase a business, short or long-term working capital, refinance business debt, and to purchase equipment. Many folks use the Express loan as a way to get started. They're looking for less than $350,000 generally to purchase a piece of equipment, to look at maybe doing a revolving line of credit to help with working capital for their business. They may be looking to move to a new location, to start a business, to do renovations on their current location, to buy equipment. And that's generally what we're looking at the SBA Express. As I stated, most of those are done in-house with bank documents. So you would go through a regular bank approval first, initially, and then the documents, once approved by the bank, it would be submitted to SBA for their approval. So that's one of the things on there. The next one I'm going to discuss or talk about is the SBA 504 loan. The maximum loan amount for that is $5 million. This one is used mainly to purchase large equipment, machinery equipment, long-term equipment, something that's going to be substantial and around for a long time, maybe to purchase a building for your business or to look at doing new facilities. So it is available through a community development corporation, and it is used to promote business growth as well as job creation. The company must be, the business must be a for-profit company with tangible net worth less than 15 million and an average net income that is 5 million after tax. It cannot be used for working capital or inventory, consolidating or refinancing existing debt, or speculation or investment in real estate or rental property. So if you are a contractor or a home builder that builds spec homes, this would not be the product for you. And how it works on the SBA 504 loans, it is, most people know it as the 50-40-10 split. So 50% is lent by the bank, 40% is lent by a community development corporation. And in this state, we have some awesome community development corporations in Capital Access, which is in Louisville, and Community Ventures, which is located in Lexington. And then 10% is required owner equity from the business owners. So just remember 50-40-10. That's the biggest one on that. As I had stated, it is used to purchase or existing building or land, provide new facilities, and long-term machinery and equipment. So it cannot be used by nonprofits for working capital or inventory, consolidating or refinancing debt, or speculation and or investment in rental real estate. So the repayment on that, again, it starts with the bank, or the relationship starts with the bank or starts with your community development corporation. Generally, it starts with the bank. You found a building that you want to purchase. So the bank would look at and discuss with you about the amount that you're looking to put down. And if it's 10%, then we would look at the option of doing an SBA 504 if you're looking to build a building, purchase a building, or purchase extensive equipment. And the interest rate is based on treasury bonds through the CDC, but the loan, as I stated, it does initiate with the bank. Okay. Oh my gosh, I'm talking faster. So how to apply with for your small business administration loan. The SBDC does an excellent job of providing assistance that we as bankers love. They do an excellent job of providing the business plan, the financial projections, and pointing you in the right direction on getting your business done. Because as an SBA funded loan, it is mostly required that you have projections and as well as an overview and a business plan on the business. So work with your SBDC consultant to help you with providing that information. It's very important important as we do our analysis in order to make a lending decision for you and your business. So the SBDC does have an excellent checklist for the needed documents and then other SBA lenders on that. So couple of things I'm going to spend some time with, and if you have questions, just let me know. So as I mentioned, there are some new changes with the new stimulus bill that was signed in December, right after Christmas. So right now, there are no fees for the SBA and the 504. Those fees have been dramatically reduced on those. The increase guaranteed, especially on the Express and the 7A loans, have gone from 75 to 90%, which is awesome, which means that if you are limited on collateral or equity, that's an opportunity for you. There is an also increase in, I had mentioned, to the maximum of the Express loans to $1 million. And additionally, if you have an existing SBA loan, there are credit relief payments that allow SBA to make payments for you on your behalf to your existing loan to help you during this time. I know last year when they offered this, it was a great lifeline for many businesses who were struggling at that time when SBA was and SBA stepped in and during the CARES Act and started making those payments for folks. So it was very helpful to for them to obtain those 6 months worth of payments. And also that has changed a little bit based on the type of business. SBA is going to offer that again, offering 3 or up to 3 months or up to 8 months, depending on the type of business or until funds run out, the type of business. So those who are in, who have certain NAICS codes, NAICS, can receive up to 8 months worth of additional payments. And those businesses, other businesses will definitely, could possibly receive up to 3 months worth of additional payments for SBA. And those should start within February or March. And if you have an existing SBA loan, your lender will be in touch with you regarding that, as well as if you have an existing loan, you should have been, if not, be receiving letters regarding the new credit relief assistance. So next thing that everyone asks about is the Paycheck Protection Loans, the PPP loans. So it is a PPP2, which can be very confusing, but for those who did not obtain a Paycheck Protection Loan in the first round back in April, there is an opportunity for you to apply for that at this time. So I would suggest that all go to the SBA.gov site to get the application and the latest updates on that. And please read that. It is totally different than for the first PPP that applied back in April of 2020. Also, for the Paycheck Protection Loans for the second round, which is now for those businesses that obtained the Paycheck Protection Loan back last year, they may be eligible in order to apply for the Paycheck Protection Loan this year. Let me back up on those businesses who are eligible for the Paycheck Protection Loan that did not apply the first round are eligible to, or could be eligible to apply in as a first-time PPP loan. So last time our farms were not included, so this time farms are included. Your business had to be established before February of 2020 in order to apply for that. I know, and we've been seeing lots of new things in the news that a number of businesses have started since the pandemic, and they started in later in the year. So they at this time are not eligible for the Paycheck Protection Loan because they were not established in by January, February of 2020. So about the second round PPP, so let's go back to that. So in order to qualify to apply for the second round PPP, you have to show a 25% reduction in sales from 2019 through 2020. That can either be by quarter or by annual. So you need to make sure that there is a 25% reduction. If there is not a 25% reduction, then there is not an eligibility for you to apply for a second round PPP. So that's the first thing. So once you have determined as an existing business that you have had that 25% reduction, depending on your NAICS code, so you will either take your average monthly payroll and multiply that 2.5 times to determine your maximum PPP loan, or depending on your NAICS code, you would multiply your average monthly payroll by 3.5 to come up with your maximum paycheck protection loan amount. So there's lots of moving parts. I would suggest, again, always go back to your SBDC consultant, or make sure you go to the SBA.gov website. I know that there is lots of information out there, but if it doesn't say SBA.gov, then I would just be very cautious about clicking on any additional links. There's some information out there that may not be to your best interest as a business owner, and asking for information that's maybe fraudulent. So just make sure it's the SBA.gov website, or contact your local SBDC consultant to point you in the right direction. So there's that. So I know I gave you lots of information about the SBA, the paycheck protection loans. The main thing to remember is that if you are interested in applying for an SBA loan, that it starts with your banker, so as well as your SBDC consultant. So if you're not ready to apply for a loan yet, I always tell people to go in and talk with your banker and to say, I'm not ready yet, but these are the things that I'm looking at for me and my business. What is it that I need to do in order to start the process? Or what will I need to have put together in order to apply for a small business loan? It's better to have that information prior to applying for a PPP, or before you're ready to apply for a PPP, an SBA loan, sorry. Before that, to know what you need to have in order to move that process forward. One of the big things that the SBDC and the SBDC consultant can help you with is your a stated business plan and financial projections. That's really important, as well as the other items you will need is a past 3 years personal and business tax return, personal financial statement, a listing of the sources and uses of funds, what type of equipment are you purchasing, what type of building are you purchasing. Those are the things that we will need from you on that. So work with your SBDC consultant, work with your banker on those. Before I go to some final things, are there any questions, or Dave, that I'm missing at this time?
Yeah, we've got a ton of questions. Mary Pat has a question. Hello, Mary Pat. Okay. She wants to understand a little bit about why the increased guarantee is important.
Okay. The increased guarantee is important, especially right now, because it's additional security and helping those who may not have been able to obtain funding traditionally through the bank. It'll allow them to do that. So the additional guarantee will allow, so say for instance, if you didn't have the down payment, or if you don't have the equipment that you're purchasing is not, the valuation on that is not 100%. To secure the loan, the additional guarantee provides that security for the bank in order to provide that loan, possibly provide that loan for you.
Oh, thank you. She also would like to understand a little bit more about interest rates, and I'm gonna add a little bit to that too. So, on 7A loans, are they fixed rate, or are they fixed to like some other, like LIBOR or something like that?
Actually, I'm sorry. It depends. And it depends on what you're using the loan proceeds for. So let's say we're purchasing a building for your business. So if you're purchasing a building for your business, it would be amortized over 20 years. But the interest rate could be fixed for 3 years, or fixed for 5 years, or fixed for 7 years. And then it would be tied to Wall Street Journal. And it could float at that time. The one thing about an SBA loan, it's a good thing and a bad thing. There's no floor and there's no ceiling, so that's an opportunity, and there's no prepayment penalty. So that's an awesome thing. So it could be fixed for 3 years, 5 years, 7 years, or 10 years on a building, but generally not for the entire term. The one thing the 504 offers you is that the CDC portion of that 40% is fixed for their term, but the 50% from the bank will not be fixed for the entire 20 years.
Awesome. Thank you. Larry would like to know if the credit relief payments are automatic, or do you have to request them?
They should be automatic. You should not have to request them. We didn't request them last time, I don't believe, but hopefully Larry, if he has an existing SBA loan, that he has received that letter from SBA explaining that how those will be applied and when those will start based on when your loan was approved or funded. So it really explains that. And if I need to, Dave, I can send you that sample letter to send to folks.
Okay. I think you already did.
Okay.
And on top of that, so if you receive approval for a new loan today, that also counts? You get credit relief payments on a new loans?
There is a possibility that could happen, that you could receive credit relief. There's a possibility.
Okay. What makes it a possibility and not a certainty?
Well, it just depends on when it was authorized, because that letter will state exactly when it was authorized and when it was approved. So on when that will be. So it looks like from the letter, those that were authorized, if I remember correctly, and approved between October and the end of January, the way I read the letter, it's those are not, which is a change. Those are not eligible for the credit relief payments. Those that are authorized and or closed after January 31st, it appears that they are eligible.
Wow.
I know it's very confusing, and I know. I've been reading this over and over to make sure I'm reading it correctly. So, but that's what it appears to say. So, but I'm waiting on clarification on that, because that's what it appears that the SBA letter does state, which is kind of confusing and strange, but
it is confusing and strange. Oh, gosh. So Julie says she rents out farms, barns, and houses. Is there anything for her? She's been turned down twice for financing.
Farms, barns, and housing. I don't really. She rents out farms?
That's what she says, yes.
Okay. For her business, or I'm a little confused.
Yeah. Well, maybe you could talk about, I don't know, this could, I don't know.
So is it, okay, so let's look at this. So I guess she, I'm gonna make an assumption because I don't know. So I'm assuming that those are investment properties that she rents out?
I would think so, yeah.
Okay, so the investment properties, it goes back to the real estate again. So investment properties do not count because it's not. So if you have a retail store that you own the building on, then that would count. But investment real estate does not count. So if you have a house that you rent out, is generally not SBA eligible.
Yeah, you would just have to use commercial financing.
You'd have to use traditional commercial financing, correct?
And really, what these SBA loans are for is to help people, access capital that may not be able to access capital from a traditional standpoint.
Correct. And one of the other things, not that investment property does not offer this, but the other thing that's really big on the SBA job is job creation. So not only is it having folks access to capital that won't have access to traditional financing, it also is an opportunity to provide job creation. So that's the big thing. So your restaurant, your contractor is actually providing jobs for not only themselves, but additionally others.
Gotcha. Thank you. Something that you and I work a lot on, and something I'm kind of passionate about, is this debt consolidation, especially folks that kind of get trapped with some predatory or online lenders. And this is a great way to do that. We've done a couple really good deals where I thought we really made a big impact on the client. Can you just kind of maybe summarize for everybody that kind of scenario and why it's important to maybe get out of underneath those online lenders?
Correct. I understand that many of us do that because we're in a hurry when we start our business, or we just don't know. So we need funds fast because we need to start. So we put it on a credit card, thinking with the intention that we're going to pay it off rather quickly, because we get those things in the mail that offer 0% interest rate. So there is an opportunity to do debt consolidation with an SBA loan. One of the things that you have to show, as Dave and I have worked on, that it was used for business purposes, not personal purposes. So I would suggest to people, if you have done that and used a personal credit card to fund businesses because the interest rate was low with the intent to pay it off, to also keep the receipts that you have that you use to purchase it. So if you used it to purchase equipment and you put it on a credit card, keep the receipt of the equipment to show proof that you have to do that, because if it becomes an SBA loan, we have to show that it was used for business purposes, or that you used an online lender for that, because we're all in a hurry, and I understand that. But unfortunately, that hurry puts us in a position that sometimes that interest rate is, at the initial it's great, and then it goes up very high. So make sure that you're keeping track of that. But right now, with the interest rates as they are on the commercial banking side, you're looking at, depending on your credit history and the things that you have, you could be looking at a nice interest rate of, somewhere between Wall Street Journal Prime plus 2 or 3, and Wall Street Journal Prime right now is 3.25. So you'd be looking at an interest rate, of 5.25 to 6.25, where some of these are 8, 9, 10%, unfortunately. So that could be saving you and your business quite a bit of money.
Yeah, and I think a couple of those we worked with, they had those online lenders that took a certain percentage of your sales every week. Correct. And when we computed the interest rate, it was in the low 30%. And so they went from paying maybe 4 or 5, maybe, what was it, $8,000 a month to $1,000 a month or something in payments?
Correct, in payments. So that means that you have additional funds in order to grow your business. Right. So, which is very, very important, because when you do those online lenders, and I understand that there is a reason for them, and most of the time we do those, one, because we're in a hurry, and two, that we didn't know. because you didn't have access to the wonderful people at the SBDC to help you with that. So someone told you, or you went searching online, and then they found you or you found them, and then you're like, oh my gosh. But it's been those are really, 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 I've enjoyed doing those that we've worked on, Dave, because it has saved them an incredible amount of money.
Yeah.
Incredible amount of money, and put them in a better position on their businesses, and allowed them to thrive. I mean, when
Yep.
you're paying,
You just can't afford that much cash going out the door. And
no, and
it was
still
very,
and grow your business, and
right.
still grow your business.
It was very satisfying for me. I really like doing that. So if any of you guys out there in that situation, you know where to find me. We'll help you out. A good segue out of that conversation is some of the stuff we've been seeing on like online fraud, to kind of trick you into thinking you're doing, getting a PPP loan or something like that. And, something I've seen is where somebody will stumble across a website and that website will ask for $100 application fee or something like that to get a PPP loan. There's no application fees for any of this stuff, is there, Shirie?
We at Community Trust Bank do not offer and do not charge an application fee. The SBA is not charging any fees for those. So if there is an entity that is doing that, they're doing that on their own. But Community Trust Bank does not charge a fee, nor is SBA charging a fee at this time on those. So be very, as I mentioned, if it doesn't come from the SBDC or if it doesn't come from SBA.gov, I would be very, very, very cautious about that. So talk to your local bank. I know I'm located in Versailles, which for Louisville is a trek for some folks, especially since we're supposed to be getting some weather today, but there are lots of local entities in your area that is offering paycheck protection loans. And you don't have to, some of them are doing them for only customers, and some of them are doing them for those non-customers. So just be aware. I would check with Dave and his team, or your local SBDC if you're not in the Louisville area, just to make sure that those are available for you. There is not a fee at this time. So,
yeah. Something else I've seen is where the website, the SBA is kind of misspelled, so it might be sba.gov.com or something like that. So you really have to be mindful.
Paying attention. Right,
yeah,
you do.
pay attention. Yeah.
And as I tell people, I know, and we all are guilty of it, because we talked about the Paycheck Protection Loan. We talk about number 1 and number 2, as well as the SBA loans. I will tell you, the SBA paperwork, even though we do those loans in-house on bank documents, the SBA 1919 is the form, which is the borrower information form. People are like, really? I mean, it is a form that you need to complete. It is sometimes, it is a little tedious, as I have to tell myself many times a day, reading is fundamental. We have to read it, as well as that on the PPP loan. You have to read it, because on some of those questions that you have to answer the question, yes, no, fill in the blank. Plus, you also have to initial it or be specific about it. So make sure that you are actually reading the question. And I'm guilty of it. I'm a big scanner. So, but I have to tell myself, like I said, many times a day, reading is fundamental. We have to read the instructions. We have to read the information.
Yeah. David has a question about the fee specifically. He wants to know, is that just the SBA guarantee or all fees, or can you clear that up for us?
Yeah, it's the SBA guarantee fee. So let's say you're purchasing a piece of equipment. So you will still have a bank underwriting fee, or the bank on an SBA loan, they call it a packaging fee. So, which is generally very minimal, most of them. So on the SBA fee, you will have a a packaging fee, so the SBA guarantee fee is waived, but then you also have fees if there needs to be title opinions or UCC searches. You will have third-party fees on that.
Okay, thank you. Caton wants to know what's kind of the speed, if they have all their info and paperwork ready, what would be the normal process under current conditions, let's say, not normal conditions.
I'm laughing because right now,
Yep.
because of interest rates being what they are and very low, all of us are extremely overloaded. And I'll speak for myself as probably other bankers, not with Community Trust Bank and others. Things that we would normally get done within 30 to 45 days don't happen that quickly anymore, only because if we have to use, I'll use as an example, if we're needing to get title work or title opinions or deeds or information from a clerk's office, and that clerk's office happens to be closed, or many working from home, or happen to be have staff on quarantine, there is a delay. So I ask people to be patient. I understand everyone is in a hurry and you need the funds, but things unfortunately aren't working like they used to. The things that used to happen fairly quickly are not happening that as quickly as they used to. Because, I mean, just like with any other business, if you have a business person, if you have been exposed, then you have to quarantine for 10 to 14 days. So that brings staff out. So just asking everyone to be considerate of that. So that's where we are right now, in a nutshell. I mean, I used to be able to say, yes, it's going to happen quickly, but nope, can't say that anymore.
Yeah.
So.
And there for a little while, the SBA shut the portal down.
The portal down, yeah. And right now, I think it's a little better. It's still a little slower, only because of PPP, I believe, is taking a lot of that bandwidth up. So working on it, but it's still a great opportunity. I wouldn't, SBA is a great product. If it meets the needs of your business, I would highly, highly, highly recommend it.
Right. Here's a question along those lines. Do banks compete for SBA loan clients? He has a current 7A and wants to expand his business. Is it better to stay with the same bank or shop around?
One, I would make sure, should not have a prepayment penalty, but I would check to make sure there's not. One. Two, probably your existing bank has all the collateral, I would assume, but that's something to check before going to another entity. Generally, your existing bank, if you have funded an SBA loan, has a UCC filing on the equipment or inventory fixtures, or has a real estate mortgage on if it's a building. So going to another entity may be difficulty because the initial bank may have secured all of the collateral.
Yeah, thank you. If you are interested in purchasing a business, specifically a sole proprietorship, and that needs renovations and new equipment, would you be eligible to apply for the PPP or the SBA 7A? Yeah.
It would be an SBA 7A if you're purchasing a business. So you would need information on that business as well as a purchase contract. What exactly are you getting with that purchase? Is it inventory, equipment, or just name, goodwill? So you would need some information on that. But there is a possibility that you could do. Actually, I'm working on a project right now that's a business purchase that we're using SBA.
Yeah.
On. It's a business that's been around for a long time, so it's not a new business. It has a history that the people who are purchasing it also have a history and are looking to purchase it with an SBA guarantee.
Thank you. So the 7A is a great tool to use to purchase businesses, and I know they've changed the rules. I'm going to ask this question for my own benefit, Shirie, but
Okay.
the issue of using seller's notes for equity injection is what's the latest on that? Were there any changes on that?
Where you have
A little bit of cash, a seller.
little seller.
Yeah.
Yeah, not a fan. But it is a possibility. Each individual business and each entity is different. So what happens on that, if we do a seller's note, the seller would need to subordinate to the SBA and to the bank.
Or do a standby for a period of time, a year or two before.
Correct.
Yeah. Okay. Yeah. Good stuff. So let's see. We've answered that one. Let's see. I'll let you answer this one, but I think we talked about it. But he started his business August 2020. Are we eligible for the PPP2 loan?
So did they apply for a PPP1? It's very confusing. It's considered a PPP2 if you had the PPP1.
Right.
If you've never had a PPP, it would be a PPP1.
Right.
And I'm going to look. We said August.
Yeah. I think the cutoff was February 15th.
February. I think it was February of 2020.
Yeah.
Yep, because you're not eligible.
Yeah, unfortunately. But you are eligible for other SBA loans, though.
Correct. You're eligible for other SBA loans, and you actually are not, because I just had this, you're even not eligible for the EIDL loan. So because of the start date.
Right. Here's another PPP question from Sean. How you doing, Sean? Good to see you online today. In addition to direct payroll costs, can you add or ask for additional funds to cover workers' compensation insurance when applying for the PPP?
So is this a PPP1 or PPP2?
It doesn't say, but I think they're basically the same. I think they apply for both.
Both, yeah.
Yeah.
So I think and I don't have it in front of me, but I believe you can. It's based on payroll, and if I remember correctly, on the one there was a line on the calculation sheet that you could look at doing those things on there.
Yeah.
I don't remember off the top of my head, but if I remember correctly. And if need to, I can send that worksheet to you, Dave, and you can send that out. But
Yeah.
that tells you that on there. I think it was.
The broad definition I saw was that a lot of those HR costs were also included
in
the
payroll.
new one. Yeah, in the new one. So 401k match, just things like that weren't included in the first round. They're also included this go round. So yeah. Bill wants to know about a 7A Express. Is there a minimum amount of time the business has to be opened to apply for that?
No. A lot of Express loans are that we do. I think Dave and I have done, and the other folks at the SBDC have been startups. Some of those.
Yeah.
So quite a few of them, actually. It's a good way for someone to get started. Mm-hmm.
It's a really good way. Another cool thing that works with these SBA loans is if you check with your community, a lot of communities have loan funds that you can use that will subordinate to the SBA, so you can kind of add something on there in second position. A lot of economic development departments and counties have these funds, and so it's great to kind of partner up with a bank and get all that done. Let's see here. Alicia wants to know about bonding programs for WBE contractors. Did you guys do that?
We have not. That I'm going to defer to you on that one because I have not. So
yeah, I know that one, we just finished a project, you and I, that we had a big issue with that. So
Yes,
you'd think we would know more about it after all that, but
I know, but yeah, we worked it out.
yeah.
But yeah,
Alicia, if you reach out to me, I'll see what I can find out for you.
yeah.
So, here's a great question. So, in a multi-unit business, he'll need to close or sell partial. How to approach the bank or the SBA for approval? So, I guess he has to relinquish some collateral that the bank may have. What's the best way to navigate that?
So a bank has it right now, and they have that collateral,
I think so. That's the way I'm reading it. Yes.
and he wants to use that existing collateral.
No, he wants
for-
to. He needs to close his multi-unit businesses. I guess
Gotcha.
it's all under one umbrella. He needs to close or sell a part of it, but he doesn't want to have to. I guess he wants to know how the bank will feel about that, since he wants to release that collateral.
So I'm assuming that's going to be paid off with that loan.
I don't know. Well, put your banker hat on. And tell me what you would do if I came to you with that issue.
No, well, I mean, because that would be the big thing. Are we paying off that debt and refinancing that debt? That would be my biggest question. If we're looking to pay off that debt and refinance that debt, that's what I'd be looking at. We wouldn't just be releasing collateral unless that was being
Right.
paid off. So that's the biggest question. One thing is that I did not mention, that you cannot refinance an SBA loan with an SBA loan. So if there's an SBA guarantee on that already, there could possibly not be an opportunity to do another SBA loan on that. So like if you're with Bank A and you want to go to Bank B, Bank A has an SBA loan on it, guarantee on it, but you want to use Bank B, want to do that. So you can't use Bank B to pay off that SBA loan of Bank A in order to finance that.
Okay. Let's see. So I think I missed Sherry's question. I hope this is the right one. So she says she received a loan last year, but would like additional capital. Should she apply for another loan or try to get additional money on the current loan? It is an EIDL loan.
Oh, the EIDL loans came directly from SBA. They had nothing to do with us here at the bank. So if you don't have an existing SBA loan, so you may want to get a new SBA loan directly through the bank partnership. The EIDL loan came directly from SBA, but you'll also have to realize if there was collateral, SBA did file a UCC on the collateral on those EIDL loans.
Okay, thank you. What's the minimum credit score that you would need to apply for any of these SBA products?
Well, it's dependable, but but
I hear that a lot from you whenever I show you.
I know it depends on that, but if it's a strong enough business with a strong enough revenue, really mid 600s. I don't think we've done anything less than a mid 6. Dave,
I don't know. I think I remember a couple sixes, but
Yeah,
nothing below 6. Nothing below.
nothing below a 6. So
Yeah.
nothing below a 6. And I think the I remember correctly, the 6s were unfortunately those businesses that had used credit cards or
Yeah.
So
But we did it. We got it done.
we got it done. But yeah, it was a difficulty, but we showed that because of the payments that they were receiving or paying out to these online lenders and to the credit cards, and reducing that payment, it showed that it was a benefit to the business.
Yeah. Let's see here. Joanne wants to know about the interest rates. Are they all the same at all SBA lenders, and specifically the PPP loans as well?
The PPP loans, the interest rate is the same. The federal government has those at 1% for a 5-year term if the loan is not forgiven.
Right.
And then on the other SBA loans, each lender has their own interest rates, and it will depend on collateral and the use of loan proceeds.
Yeah. Okay. Shirie said this is very helpful. She was really enjoying this. So thank you. Thanks for that. I think we've got everybody's questions. Well, kind of we're getting close to the top of the hour anyway, but Shirie, thank you so much for doing this. It's been great.
All right. Thank you all very much. I appreciate it. Just remember, the SBDC does a great job. I appreciate them so much. Not just because I was a former SBDCer, but as a banker, the business plans and the financial projections that they provide are amazing and they're awesome.
Yeah.
Those that you find online or that somebody else does, I mean, they're good. We as a banker, I personally do not care for them because they do not sometimes meet the criteria that I need in order to make a lending decision. So
Right.
I appreciate you all. Thank you all very much. Reach out to Dave and his crew or any of the other SBDC folks, and they'll take great care of you.
Yeah, and thank you, Shirie. You're a great resource, and I really appreciate everything you do for us. I don't know what we would do without you.
Thank you. I appreciate that.
All right. Well, we'll see you guys next week. Thanks for coming, and stay safe out there. And we'll see you next Wednesday.
All right. Thank you. Bye-bye.